Let's explain how the strategy Eagle Eye Quantum Scale-Out actually works. First, the strategy checks the relationship between NQ or MNQ and ES or MES. Basically, it's wants to know, are these markets moving together? Before strategy does anything, it needs to confirm there is a strong connection between them. This is not a guessing strategy, it's mathematical. If you are like me, kind of believe in numbers and maths, this is it. This is the strategy, how it works. So it wants the number to line up first. So if the correlation is weak, the strategy simply does not trade. And that's important because sometimes NQ and ES can disconnect from each other for a while. When that happens, strategy avoids forcing entries. So it's basically no connection, no trade. Why would they take a risk to think that ES is going to follow NQ when there's no connection already existing? Once the strategy confirms the market are connected, it then waits for them to move apart, what we call divergence. One market might move first while the other one is slightly behind. That is where the opportunities start to build. Next, the strategy measures the gap between them. It calculates how far ES or MES has moved away from NQ or MNQ. Again, this is not based on emotion or opinion. It is based on mathematical calculation. When that gap becomes large enough, the strategy expects ES or MES to catch up. That is when it can trigger an entry. So the logic is simple: confirm the connection, wait for the gap, then trade the catch up move. This is the part where the strategy start to scale out profits. I have to say this: I have tested and have done a lot of tests, and I found that scale out, when you apply it to your trade, you manage to secure small profits. Just in case the trade goes against you, you already made small profits. And if you move the stop loss to break even, you would have already grinded into profit a bit. If the trade goes on your favor, then you have already took a bit and you can leave a runner to maximize the profit. And that's exactly what this strategy does. Once the trade is active, the strategy manages the position in stages. So it takes profit one, two, three, and four, and then leaves one final runner. This means it can lock in profit along the way while still giving parts of the trade a chance to catch up a bigger move. After the early profit targets are hit, the strategy starts protecting the trade, which is really important. It moves stop closer to break even, so the remaining position has less risk. That is one of the key parts of the management. Take some profit, reduce the risk, then let the rest work. The final part is the runner. This is where we want to maximize our profit. So if the market keeps going, the strategy has a chance to benefit from that bigger move instead of exiting everything too early. So, in simple terms, this is how Strategy Eagle Eye Quantum Scale Out works. It checks the connection between NQ and ES, it avoids weak conditions, it waits for divergence, it measures the gap, it then enters when ES or MES is expected to catch up. Then it scales out and protects the trade and lets the runner continue. What I like about this strategy is that it doesn't care whether the market is bullish or bearish. It's not trying to predict the overall market direction. And let's be honest, no one knows where the market is going. It is looking for a mathematical imbalance between NQ and ES, then trying to exploit the catch up move. So whether the opportunity is long or short, the strategy can work in both directions. One final filter I need to mention, which is really important in this strategy and what makes it stand out, and it's kind of a secret weapon and make it robust. Before strategy actually takes a trade, it must also see a volume spike, either long or short. So it's not just a correlation on divergence. It's also want volume confirmation before entering. This strategy is available in my website. You can check my website down in the description. I have a few strategies that are for free, and you can also have access to the code and change them the way you want. But for this particular strategy, it's a subscription based strategy to cover my cost and kind of my energy and time, the time I spend working hard on this. It's not a lot of money. You can easily cover it in one trade, but I had to put it subscription based. Thank you for watching and good luck on your trading journey.